All right. Good afternoon, everyone. Thank you for being here. And we're just going to give it a few seconds for everybody to trickle on, as it always takes a minute for Zoom to let everybody in. But thank you for being here. This is one of our most popular events of the year because it's all about one of the more complicated topics, in my opinion, Medicare. And because it's one of the more complicated topics, and because it's only something that we touch in my work as a financial advisor, we actually have, as a special treat for all of you, a special guest today. And that is Marc Maas. He's going to be doing our presentation. He's with an agency called MediChoice. If you've been to our office, they're actually just a couple blocks away from our office, and they are specialists in Medicare plans and Medicare Advantage plans, and really anything you could want to know about Medicare. So their knowledge even goes beyond ours. And we're very lucky to have Marc with us today. Again, if anyone doesn't know me, my name is Anthony Gerbi. I'm just going to be a watcher like you today because Marc is going to take over, and he's an agent with MediChoice. So he's not only going to break down the basics of Medicare for us, but he'll also be here to answer any questions you might have. And as all of you know, Medicare can be something that, yes, has a lot of generic rules, but how it ends up impacting you is always very specific. So thank you, Marc, for being here. We're so lucky to have you, and take it away.
Thank you, Anthony. Happy to be here. This is obviously entering into a very busy time of the year. Annual enrollment is going to be starting October 15th. All the plans are going to they're going to be releasing all their information here tomorrow, what the plans are going to look like for 2026. So the goal today so we're going to go through a little bit about us here. Again, my name is Marc Maas with MediChoice Insurance Agency. I've been an agent now about 10 years, working specifically with Medicare. It's what we do here at MediChoice. So a little bit of a background on our company and who we are. Again, we're in St. Louis Park here, just a few blocks from Stein. And this agency was started about 13 years ago by Joe and James Romeo, uh, both father and son. And they started it because they were selling Medicare, but they were only originally selling with one particular insurance carrier. And they really felt that, that those plans that they're trying to sell were just not fitting in with what everybody's need is. So they opened up the agency about 13 years ago and called it MediChoice Insurance Agency because we want to have the option to go through and help people find the option that makes the most sense to them. So again, we're a brokerage, so we work with all the major carriers here in the state of Minnesota. We focus on Medicare, but we can do under 65 individual insurance too for those people who are retiring, for instance, before 65. So we can help with that. But about 95% of what we do is really just Medicare focused. So we just help people. A lot of the times it's just answering questions for clients and new clients that come to us. A lot of it is those questions this time of year. Hey, what's going on with my plan? What's going on with other plans in the market? Things like that, and we help out with that. For again, the goals for today, we're going to go through Medicare 101 presentation, which is just the basics of Medicare. But then we also are going to discuss specifically at the end of this presentation what's going on in the Minnesota market for 2026 and this annual enrollment that's coming up October 15th, because there is a lot of changes, and a lot of people aren't even aware of some of those changes yet because they haven't received the letters from their current insurance company that they're working with. Those are all being sent now. They're called annual notice of change letters. So they should be trickling in for most people any day now. So that's our goals for today. Again, I've been here about 10, working on Medicare 10 years. Teresa's been here, I believe it's 7 years now with MediChoice. And then we also have Jackie, has been here about a year now. And they're our admin team. And part of what we do as a broker is we work with our clients all year with their questions also during the course of the year. So our clients don't have to call the insurance company they can call us and we will work on their behalf to fix issues. If it's a provider billing incorrectly or whatever the case may be, we have a direct line to the insurance companies and we can help with those things so our clients don't have to sit on the phone with the insurance companies and deal with that stuff. We take care of that for our clients. So all right. So as people are heading into Medicare, there's a lot of different questions when you're turning 65. You got Medicare and health insurance is usually one of them on the top of the list. Obviously, retirement or work longer. Some people decide to work past the age of 65. Then there's, physical health, family and friends, but there's also, travel involved a lot of the times, and we can help with that too in terms of insurance. If people are leaving the country, things like that. Social Security, financial well-being, obviously that is something that Sign Group works with. So that's kind of we teamed with them with the Medicare portion here to help answer those type of questions for Medicare and health insurance. All right, so when people are turning 65 or during annual enrollment, you probably notice you get a lot of junk in the mail, right? So it's very hard to tell or learn about Medicare from the things that you get in the mail because most of it's just marketing materials, really doesn't tell you how anything works, how Medicare works in general. They just kind of send stuff in the mail. So that's what we're here for, is to help. There's a ton of different plans in the market, almost 100 different plans. Is your doctor in network? Are your medications covered? Those are obviously things that are very important to people, and that's what we help out with. Is to make sure that whatever coverage we end up giving to our client is going to fit those requirements of what's important to them to have those things covered. All right, so we're going to start from the basics. Again, some of this might be information you already know, but we'd like to go over it just because Medicare does a poor job sometimes of explaining all of this. So we wanted to go into just the original, the basics of Medicare. So you have Part A, which is the hospital coverage. Part B is the medical coverage, which is pretty much everything outside of the hospital. So Part A is your inpatient hospital stays. It also includes skilled nursing, which is intensive rehab after a major event. So it's not long-term care. It's separate from that. Sometimes it's in one of those type of facilities, but it's specifically for rehab after like a stroke or a hip replacement, something like that, where you need more intense rehab. Hospice is also included under Part A. For most people, they do not owe a premium for Part A, as long as you work 10 years or how Medicare defines it, 40 quarters worth of work, then you do not owe a premium for Part A. Part B is pretty much everything else. So Part B is going to be your doctor visits. It's going to be your specialist visits. Any outpatient hospital is under Part B. So if you go and have a day surgery at a hospital, that's under Part B. So the surgeries, there's also durable medical equipment, CPAP machines, wheelchairs, things like that, labs, x-rays, MRIs, ambulance, urgent care. You can see most of everything else you have done outside of an inpatient stay is going to be under your medical coverage on Part B. 2025 monthly premium for Part B is $185 per person. And 2026, they'll have that announcement out fairly shortly. It's usually in October where they will announce what the Part B premium is going to be for 2026. Okay, so how Medicare works, what's covered, what's not covered. So I want to go a little bit through this, but this is important to understand that original Medicare covers about 80% of everything that's done in the medical service. So that means you're responsible for the 20%. So that's what those other plans you get in the market, which we'll talk about later, come in. Those supplemental plans are meant to cover that 20%, and they cover it in different ways through different plans. But Medicare does not cover dental, glasses, hearing aids, or over-the-counter benefits. There are some plans that will, however, Medicare itself does not. It also does not include prescription drug coverage. So drug coverage has to be purchased separately through a private insurance plan of some type. And one of the things with the original Medicare that is very important to understand is that there's no maximum limit to how much you can pay. So that 20% could be 20% of $1,000, which isn't a big deal, but it also could be 20% of $1 million if you have a major ongoing thing like cancer treatment. And we have seen hundreds of thousands of dollars or more be charged for those services, especially if they're going through chemotherapy. With original Medicare, you'd have to pay 20% of all of that, which obviously can be a pretty big financial burden. So that's what those supplemental plans help take care of. All right. So a little bit about qualifying and enrolling in Medicare. So when you first turn 65, you have what's called initial enrollment period. It's 7 months long. It's 3 months before your 65th birthday. It's the month of your 65th birthday and 3 months after. So that's the time period where you could sign up for your original Medicare and for a type of supplemental plan to go along with that. Now, if you're going to continue to work longer than 65, you can do that. And as long as what it's called creditable insurance, if your employer insurance is still creditable, meaning it's as good as Medicare, then you can keep that plan without any penalties. And your employer has to let you know if it's creditable. And then you can work past the age of 65 and pick up your Medicare later, and that will create what's called a special enrollment period. So that's a separate time span where you can sign up for Medicare. All right. So one of the questions we get is, where do you enroll? How do you enroll? You do it through Social Security. They handle the enrollment process into Medicare. And people often wonder, well, what if I don't do it on time? And again, if as long as you have employer coverage that's credible, there's no penalties involved. But if you weren't in any type of employer plan and didn't have creditable insurance, then you could encounter some penalties. So we help with that to make sure, obviously, our clients don't run into those type of situations. Okay, so ways to enroll. So again, with Medicare, when you're first enrolling in it, if you're not receiving benefits from Social Security, so if you're not receiving your Social Security checks yet, then you have to sign up for Part A and Part B. And there's a few different ways to do it. You can call the Social Security office and make an appointment. I'll tell you right now, the two easiest ones to get into in Minnesota here, there's one in Bloomington and then there's one in Brooklyn Center. Those are the easiest ones to get into. The St. Paul and uh, downtown Minneapolis ones are very busy and very difficult to get appointments for. So again, Bloomington and Brooklyn Center are the easiest ones to get appointments with, or you can do it on ssa.gov. You can fill the application out online. You have to create an account. You can fill out your Medicare paperwork right online. That is the easiest way to do it because you don't have to wait for an appointment. All right. And another question comes up, are there additional cost penalties or reductions in cost? So for people that earned above a certain income, there's something called IRMA, which is an income-related monthly adjustment amount. And essentially, if you did really well for yourself, and for instance, if you're filing a joint tax return, if you made over $212,000, in the last couple of years, you could end up paying a higher amount for your Medicare Part B premium. Also, if you're lower income, then you could end up paying less. And Medicare determines that, would let you know, if any of those apply to you. If you don't take Part B on time, there is a penalty for that, as there is if you don't collect or start your Part D or prescription drug plan on time. There's also a penalty for that. But again, if you're in a creditable plan with your employer, those don't apply. That's just if you didn't have creditable coverage. All right. So how the penalties work, a little bit about a Part B late enrollment penalty. So you'll pay the penalty for as long as you have not had the coverage. So 10% for every year you were eligible and did not enroll. So if you went a couple of years, then you'd have a penalty for 2 years. You'd have 10% for each of those years, so you'd have a 20% penalty essentially. And it's going to be based on that year's Part B premium. So whatever it is in a given year, and again, it's going to change every year and generally goes up. You may have to pay more if you wait to enroll too. So again, there's exceptions for it, but you want to be aware of it if you don't enroll in time. There are some issues with penalties, and we help, obviously, so that doesn't happen. Part D, this late enrollment penalty. So if there's a lot of people like get into Medicare and like, hey, I don't take any medications, and they think they don't need their Part D coverage. The problem with that is the government disagrees. The government thinks even if you do not have any need for a Part D plan, they want you to have it in case you get stuck with some type of drug cost during the course of the year. So if you don't get a Part D coverage when you're first initially eligible, it's a weird calculation. Basically, take 1% of whatever the base or average is. Right now, it's around $35. So you take 1% times the number of full months you went without the coverage. So it can add up fairly quick. A year or two can quickly, add up to some extra costs that you would have to pay each year in addition to whatever premium is on a Part D plan. So when you pick up a Part D plan, there'd be a penalty assessed. One thing to be aware of is that those penalties they don't, with the Part D, they don't ever go away. So once you have that penalty, it will be there for the remainder of the time you're on Medicare and have a Part D plan. So you want to make sure that, make sure your employer plan has creditable Part D coverage. And if it doesn't, then you need to choose one from Medicare to make sure you don't get assessed a penalty at a later time. All right. So before we go into different types of coverage to cover that 20% we talked about before, just wanted to see if there's any questions out there on anything we've covered so far.
I haven't seen any questions come in yet.
Okay, sounds good. All right. So let's go into some coverage options out there. So there's something called the Medigap supplement you've probably heard of. They usually pair with what's called a Part D or prescription drug coverage plan. They have to be purchased separately. You can't get an all-in-one when it comes to those two, or a Part C or a Medicare Advantage plan. They're very different types of plans. They work quite differently. So we're going to go through a little bit about these plans and how they work. So basically, with those two types of medical plans, it's like cars and trucks. We like to put it that way, is both will get you to a certain destination, just in different ways, right? So that's kind of the way to look at two different types of plans available. So the two different types of plans available is a Medigap, a traditional supplement plan called a Medigap plan, and then there's something called the Medicare Advantage or Part C plan. They work very different. Premiums are very different. And first, we're going to discuss how a Medigap or traditional supplement works. We say traditional because they've been around the longest. So what happens with the Medigap plans is you keep obviously your original Medicare, and original Medicare will pay you the first 80%. Then what happens is the Medigap plan comes in and pays the other 20%. And there's different ways to do it with different plans. They have a very comprehensive plan that a majority of people go into, where you end up with really no out-of-pocket costs. So they'll cover the rest of that 20%. There is a Part B deductible. This year it's $257. And again, that's probably going to go up next year, which will be released soon. But you pay the first $257, and then everything after that, you really wouldn't have anything out of pocket. You still have to pay your Medicare Part B. So you always have to still continue to pay your Medicare Part B premiums, regardless of the supplemental plan you choose. The plan cost for a Medigap plan can be anywhere from $54 for a plan with a high deductible, where you actually have a pretty high out-of-pocket cost, to $370 or more. Generally, most of the plans, those very comprehensive plans with no out-of-pocket cost, a lot of those are around the $300 premium range for those type of plans. And again, you do have to pair that and get a separate Part D prescription drug plan to make sure you don't get a penalty later on. And they have plans beginning around $5 up to $150 or more. The majority of those plans are within the $20 to $60 range that most people go into. But there are some plans that are a little bit more for people that may have some different needs. So basically, as you pay more, generally, the medications that are covered are more extensive. as you pay more for some of those more expensive plans. So a few things with the Medigap plan. Again, you have the higher upfront cost. Then after that deductible, you really don't have much out of pocket. But if you first are entering Medicare, you get into one of these plans, Medigap, if you wanted to go into one of these plans with what's called guaranteed issue, which means you don't have to go through underwriting. You can get that plan in the first 6 months that you're getting your Part B without having to worry about underwriting. After that time, you would have to go through underwriting. So when you hear some people say, hey, if I don't get one of these plans now, I'll be locked out later on. Well, that's what that means. You're not necessarily locked out, but you have to go through underwriting. It is sometimes fairly difficult to get through the underwriting because anything that comes up, even if you think it's minor, even some certain medications could create people to not pass the underwriting. Simple things as skin cancer sometimes, even if it's just a very minor one, will have the ability not to be in one of these plans, will disqualify people. So getting in when you first get into Medicare is very important. That's one guaranteed issue period. The other is if you lose your current, say you're in a Medicare Part C plan and or the next plan we talk about, Medicare Advantage, because they're taking the plan away or discontinuing the plan, you also can get guaranteed issue into those Medigap plans. So that's really the only two ways to get in there outside of a move to another county or state, generally where you can get a guaranteed issue into the plans, those Medigap plans. They do not have dental. They do not have coverage for eyewear or hearing aids or over the counter, something called over the counter. We'll talk about that with Medicare Advantage, but they really don't have any extras. So although they cover very comprehensive in that you don't pay much out of pocket on Medicare covered expenses, you really don't have any extras that go along with it. Okay, so that's one thing that people need to be aware of when it comes to Medigap. Medicare Advantage Part C plans are going to be the next ones we talk about. And here they're a little bit different in that Medicare doesn't really pay for anything here like they do with the Medigap, where they pay the first 80%. With Medicare Advantage Part C, once you enter into one of those plans, essentially the insurance company that you're working with or that you choose to have the plan through, they're going to be responsible for the full cost during the year of any of your expenses that you have along the way with your health care. You still do have to pay the Medicare Part B premium, which is again the $185. But Medicare Advantage plans also include a Part D prescription drug plan. So you don't need to purchase a separate plan. It's already combined with the Part C plan. So that's one of the reasons when we meet with people, and if they're looking at this option, it's very important to know what medications you're on because they all cover those prescriptions very differently from company to company, sometimes even between plans with the same insurance company. So we help with that process. We have a software calculator that we can put in somebody's medications, and it tells us what the different costs are with the different insurance carriers. So it tells us which plans are at the lowest cost. So the plan cost for premium could be anywhere from $0 up to a couple $100. The majority of the people fall within the $50 to $100 range for Part C plans from a premium perspective. So again, a lot less than a majority of what the Medigap plans are. And the difference is you pay as you go for services. You pay copays, much like you do with employer-based plans. The difference is there is no deductibles in Advantage plans. So right away, you're making a copay. Most employer plans will have a large deductible, say $200 or a $300 or $2,000 or $3,000 deductible you have to hit before you really have any coverage. That's not the case with Medicare Advantage, where right away, for instance, if you go to a primary care doctor, the plans here in Minnesota, you don't pay anything. If you go to a specialist, it might be $35, $40 or something like that as a copay. Again, you don't have to worry about hitting a deductible. But they do have something called max out of pocket, which is your worst case scenario. So they have a limit to how much you can spend in a given year. This year they range from 2,800 up to 6,700 as your worst case scenario. So if all those co-pays you paid along the way, if they add up to the max out of pocket, you're 100% covered for the rest of the year. Now, generally, co-pays aren't going to put people there, but sometimes there are some expenses that do put people there. Generally, one of them would be chemotherapy for cancer treatment, for instance. That's a percentage on every single Medicare Advantage plan. It's 20% across the board. So if somebody is taking chemotherapy infusions, for instance, that will put somebody at their max out of pocket within a treatment or two usually. But then they'd be 100% covered after that. So you have the knowledge when you're going into a plan, and that's part of the choice when we're looking at this with clients is, where do they feel comfortable as having their max out of pocket amount? So in the worst case scenario, they know, what it is and what they would need to cover in a worst case scenario. So Medicare Advantage does have a few things that Medigap plans don't. They do include dental. However, some of that is changing as far as how much dental is included in different plans in the state. And we'll talk about that. But they do have glasses, they have coverage for hearing aids, and they have something called over the counter, which is an amount given monthly, quarterly, or semi-annually. And that all depends on what type of plan, what insurance carrier. And some insurance carriers, by the way, are eliminating that for 2026 and are not going to have that. But it's money available to get things like over-the-counter Tylenol, Band-Aids, toothbrushes, allergy medication, things like that. So that's what the over-the-counter for is, stuff that's not prescriptions, but stuff you can just go and purchase off the shelf, essentially. All right. So that's a lot of information when it comes to the different types of plans. But that's what we help people decide is, hey, which plan makes the most sense for them. And then also how the coverages will vary depending on what doctor they go to and what medications that they're on. So we take that whole complicated process and essentially make it a lot easier. So just to delve in a little bit more now, Medigap plans, again, they're still offered by private insurance companies, but they pay that 20% again that Medicare doesn't cover. The best time again is when they're first getting into Medicare. That's the time frame where you're allowed to get in there without having to go through underwriting. Part D prescription plan, again, they're also through private insurance companies. But when you're looking at these, you want to have one, even if you're not on any medications when you enter Medicare, just so that you don't encounter any type of penalty down the line. Most of the plans have a lot of different nationwide pharmacies that you can go to. CVS, Walgreens, a lot of the different grocery stores here, Hy-Vee, Cub, things like that, where they have those pharmacies and network. A little bit about how Part D, our prescription plans work. This has all changed very recently, which has really caused a lot of changes in the market that we're going to go through in a few slides here. But it used to be they had in 2025 or 2024 an $8,000 worst case scenario on the medication side of things. So this year things changed and people had a $2,000 max out of pocket. So that is what we have currently in 2025. So the government made that change. Actually, it was in the Inflation Reduction Act when they passed that bill. That part of it also had a Medicare portion in it, and they were trying to make medications more affordable for people on Medicare, and that's why they reduced that $8,000 max out of pocket to $2,000. But that also means that the insurance companies had to pick up that difference in cost, which has really affected a lot of the different insurance companies here in the Minnesota market. They had not adjusted, unfortunately, for that fact. So now they will be adjusting this year. So it's kind of a prelude there to what we're going to get into in a few slides. But the Medicare market is here in Minnesota is going to go through major changes for 2026. So the plans are going to look quite different here during annual enrollment. 2026 will have a $615 deductible for Part D. Now, some companies may lower that to a lower amount as a drug deductible, depending on the plan that somebody enrolls in. Again, the total out of pocket this year was 2,000. Next year it's going up to 2,100. So that's again worst case scenario on the drug side of things for anybody in a Medicare plan. Now, the one thing to be aware of is that if you are on a medication that is not covered by your plan, then that cap no longer applies. Okay, so it's very important. That's one of the reasons when we're working with somebody, the most important part of it is we make sure their medications are covered, because if they're on a medication and you're with an insurance carrier that doesn't cover it, then that's not going to be included in that capped amount. So we want to make sure all of our clients have coverage for all their prescriptions so that they can all be counted for that 2,100 worst case scenario next year, 2,000 this year. It's called catastrophic coverage. I want to point out that's what Medicare refers that to for the max out of pocket. Okay, Medicare Advantage plans, we kind of went through some of that already, but again, it's more of a bundle type of plan. I think that's, I've heard that with different insurance companies on their commercials, bundle your car and home insurance and stuff like that. Essentially, that's what Medicare Advantage plans do, is they bundle your health coverage along with your drug coverage. It's all in one plan, one card, one payment. And that is, as we're looking at Advantage plans, one of the nice things about them is that they do have the extras, and it's all one payment, one card, things like that. All right. Any questions before we go into the Minnesota market updates for 2026?
I haven't seen any come through. If anyone does have questions, though, feel free to put them in the chat. And there's also the Q&A box as well, just for the future. But I think we're good right now.
Okay, sounds good. Yeah, I encourage questions on the next part here. As what we're going through now is the market update here. Most of it's specific to Minnesota, obviously, and what we're going to talk about. But there are some significant changes that are happening this year in this market. Unfortunately, it's going to look quite different from what the plans look like for 2025 here, if you're currently in a plan. So there's going to be significant industry-wide and nationwide changes in premium benefits for Medicare Advantage plans and Part D plans. And here in Minnesota specifically, that will be the case. We're going to see increased premium. We're going to see lower benefit levels, which just means people will be paying more for things like their hospital copay, or their copay to a specialist, or for a surgery on an outpatient basis, things like that. You're going to see some increased amounts that you're going to have to pay on those things in 2026. And a lot of this, again, is due to a couple things. So what we've seen the last number of years actually is an increased use of Medicare Advantage plans specifically, but Medicare in general. A lot of people put off elective surgeries during COVID, and even for the few years after the pandemic kind of ended there, people just put off having elective surgeries done. Now, in the last 2 years or so, 2 or 3 years, we've seen a lot of people go in to get those elective surgeries done. So it's increased the amount of claims coming into the insurance companies throughout the country, but Minnesota in general also did not really adjust the plans for the fact of the changes that are happening in Medicare. Not just the fact that you're having more people use the plans, but on the prescription drug side, as we had mentioned, it went from an $8,000 max out of pocket for members down to $2,000, and then the insurance companies had to really account for that extra amount between the $8,000 and the $2,000 worst case scenario. So essentially, that because they did not adjust for that in terms of premiums or benefits last year or the year before, and they put it off as long as they can. And we had some of the strongest plans in the country here in Minnesota, especially on the Medicare Advantage side. for the last year or two. Whereas other states were adjusting for it, we did not. Now this year we are adjusting for it, and we're behind the curve compared to where most of the different states are in terms of adjustment to the new reality of the increased cost on these plans. There's also been a reduction the last couple of years and how much money Medicare was giving to these plans to stabilize them, to give basically an amount per member for the plans to help them pay out all the different claims during a given year. So behind the scenes kind of work, I guess, look at how it all works. Is Medicare may give, say, $1,000 per person to be in these plans, and then anything above $1,000 in a person's expense, the insurance company is covering that essentially. So they're unfortunately experiencing cost per member well above what Medicare is providing there and the premium that our people are paying. So that's why we're seeing this large adjustment this year, this annual enrollment heading into October 15th for the 2026 plans. Because we're behind the curve, it's going to be a major adjustment this year for the plans. So
And
again,
Mark,
we talked about, yep.
we did have a question come through just
Yep.
asking, in your professional opinion, have you seen Medicare providers shrinking by the day?
Medicare providers in terms of hospitals, I guess, or are we looking, or you mean the insurance companies? Because, well, we've seen a little bit of both. So I can answer that question, I guess, in terms of both. So, we're seeing some rural hospitals, especially and rural clinics, struggle a little bit more on the provider side of things. The providers are getting a little bit less, from in those rural areas, and they're having a little bit harder time. In terms of insurance companies, we're seeing less and less plans available, and we're going to have major exodus of a number of plans in the state here where they're closing the plans altogether for some carriers. So depending on the region, it's happening a lot in the northern and outstate of the Twin Cities here. So the northern part of Minnesota, western Minnesota, southern Minnesota, they're experiencing a lot of planned closures with different insurance carriers. So the good news is down the line, things should stabilize, but it's probably going to be a 2 or 3 year process for stabilization with Medicare Advantage plans specifically. The one thing to point out with those Medigap plans we talked about earlier, those Medigap supplements, those are guaranteed contracts. So with guaranteed contracts, they can't change any of the benefits. Yes, the premium can change, but they can't change the actual benefits. So for stability, Medigap plans are the most stable plans out there in terms of the benefits, because once you have it, they can't change the plan and benefits for you, but they can with Medicare Advantage. So that's why you're going to see a lot of changes with the Medicare Advantage this year. All right, so as I mentioned, plan exits throughout multiple insurance companies. So it's not just one, but there's actually a number of companies. The big announcement, so we'll get into here now, is UCare has formally announced that they're exiting the entire Medicare market. So Medigap supplements, Medicare Advantage plans. If somebody has low income, there's special plans for low income that are Medicare based that help and coordinate with Medicaid. They're getting rid of those also. So UCare is getting rid of all of their plans. It's going to affect about 160 to 180,000 Minnesotans are going to be losing their UCare plan. So you're going to see, obviously, in this market, that is going to affect a lot of people. It's going to be a very unique year here. That's a lot of people that are going to have to choose different plans. So what they are going to have, though, as an option, because they're closing those plans, as I mentioned before, those Medigap plans, those traditional Medigap plans, the more stable plans, it's guaranteed benefits, you get guaranteed issue, meaning you don't need underwriting because they're closing your plan. So you'll have an option. You could go into a different Medicare Advantage plan, or if you want stability, you can go into one of those Medigap plans, as the Medicare Advantage market here is going to be in turmoil, probably for the next 2 to 3 years, is what we're hearing from the insurance companies in terms of increased premium, decreased benefits. Some of them are taking away dental, some eyewear, over the counter we talked about. Some are eliminating that altogether with Advantage plans. So we're seeing a lot of the extras that Advantage plans have that people really like. So a lot of those are going away or being decreased with the challenges that are being affected by all these insurance companies. So very unique year. And that's what we're here to help out with. UCare has just been people that generally been on UCare have loved the plan, have been on there a number of years. So it's going to affect a lot of people that have had those plans for sometimes 5 years or more, just because they have been good to work with. Unfortunately, financially, UCare has been struggling. They got hit hardest by these changes that Medicare had made. And essentially, that's why they made that decision. So again, UCare members, anybody in UCare, or there are some other plans. Health Partners has also, I mentioned that they'll be releasing that information that they may be closing some plans along with United Healthcare. We can't disclose what plans yet until the 1st. So we can't say that, but they have sent out information. It's been in the news that they are planning on closing some plans. So you should see that as also something that's going to be happening here. For UCare members, just so you know that they are sending out letters beginning tomorrow. So anybody that has a UCare plan will receive what's called a termination notice from UCare, and you should be seeing that termination notice arrive in the mail in the next few days, or the next week or so. And you do want to hold on to those letters if you have them, because that letter will be needed if you choose to go into Medigap supplement with a guaranteed issue. They need that letter to prove that you had your plan terminated. So once you receive that letter, hold on to it, because you may need that if you decide to make that choice. You will have passed the annual enrollment period also to make a decision if somebody is losing a UCare plan. Normally you have October 15th through December 7th as the annual enrollment period, but because a plan is being terminated, that gives you an extra time, basically to the last day of December, where a UCare member can choose another plan for January 1st of 2026. Don't advise waiting that long, but you technically could. The sooner you do it, the sooner you're going to get your card, obviously, for the 1st of January and things like that. So you want to get on that a little bit earlier, hopefully. But if you miss the enrollment period for some reason, or if you know anybody that does miss it for some reason, maybe they didn't get their mail or didn't check it or threw it in the garbage, and they realize they need to switch and it's after December 7th, they can still do that if they had a UCare plan. So again, some of the time periods here, there's what's called the annual election period or annual enrollment period, October 15th to December 7th. There is another period out there that we're going to mention. It's called the Medicare Advantage open enrollment period. Now, Medicare does not allow the insurance companies to market this period. This is why you don't see too much in terms of mail on the Medicare Advantage open enrollment period, because they're not allowed to send stuff out to market it. But during the first 3 months of the year, so January 1st through March 31st, somebody that has a Medicare plan already, Medicare Advantage plan, I should say specifically, you can change your plan. You can make one determination within that time frame to change your plan. So again, if somebody is on UCare, they missed it all together. They're in January and they go to the doctor and realize that they're not covered under their plan anymore, they can still change. But it wouldn't start until February 1st in that scenario. It starts the month after you sign up. So if somebody signed up in January who was using the Medicare Advantage open enrollment period, it'd start February 1st. Same thing if somebody signed up in February, it'd be a March 1st start date. There is that additional option for people that do miss the annual enrollment period for any that want to switch their plan. So you can't use it, unfortunately, to go into like Medigap Sup during that time period. With guaranteed issue, unless it is a U-Care plan, then there is some flexibility there. But if you're like, other carriers like Blue Cross or United Healthcare, if you're not losing a plan, you can't use that period to go the opposite way. You can use a change Medicare Advantage plan, but not to go the opposite way to a Medigap plan. And there is the special election or special enrollment period throughout the year. Plans close during the year, which is rare. Usually it happens as you're leading up to a year, like the U-Care announcement, or if you move out of the area. If you're in a totally different county with different plans, that opens up other options, whether it be Medicare Advantage or Medigap Supplement if you make them to another area that has different plans. So yes, there is ways to still change your plan depending on the situation. All right, so I'll open it up to questions now. Hopefully, we covered everything fairly well. There's a lot obviously going on. We covered a ton of information today. But again, here and available for any questions. Again, it doesn't cost anything to work with us. We're here for you if you need the help or just sometimes need to give us a call and just go over your situation. That's what we're here for. As a broker, the way it works, just as brokers, the insurance companies will pay us when we place a plan with them. But really, when you're calling us, our major goal is just to make sure that whatever plan you end up on is the plan that makes the most sense for you. And that's what we're really looking at. They all pay the same because Medicare has, if they're regulated, they tell them how much they can pay. They all pay the same. So it doesn't matter to us, what insurance company somebody goes with. What really matters to us is if that insurance company makes sense for our client, because we're not looking at how much we're getting paid or anything like that, because it's all the same. So our incentive is just to help our members, and again, sometimes it's just a phone call, just to somebody to answer a simple question, and we deal with that all the time. So our number's down there in the bottom right corner, 952-367-6350. Again, my name's Marc Maas. You can call if you have questions. If you want to set up an appointment, we can do that too. If you have any unique situations, we also got our website there, and then also my email is on there too. It's very simple. It's my first and last name. My name's with a C, but it's Marc Maas at MediChoiceInsurance.com. So MARCMAAS at MediChoiceInsurance.com. So if you have a question, just feel it's much easier to shoot on email. You can do that also. So yeah, so I'm open for any questions at this time.
All right, it looks like we did have a couple come in. The first one is asking, where can we find the 2026 cost info?
The 2026 information for most companies will be posted tomorrow. So they can't post it to October 1st. So all of it for the different companies should be posted on their websites tomorrow.
All right. Next one said, you said when a person turns 65, they have to enroll unless they have insurance. I'm planning to keep working until 67. Did you say I need to go online to the Social Security website and file something?
Not if they're going to continue to work, as long as their coverage with their employer is creditable. Medicare has this unique term called creditable, which just means it's as good as the employer. The employer coverage is as good as the Medicare coverage. The employer has to give you a letter letting you know if that plan is creditable. And if you haven't received it, you can ask your HR department for it. And that just will let you know. So if it's creditable, then you don't need to do anything until you retire. And then you can pick up your A and B. Or the other option is you can pick up Part A, because it doesn't cost anything for Part A. and then you can pick up Part B later on. What that does is just make the process and shorten the process a little bit, because you would have your Medicare Part A already, which means you have your Medicare number. So when you do retire at 67, then you just pick up your Part B, and your A is already in place. You already have your Medicare number. Your number won't change. It'll be the same number. So you just pick up that Part B portion when you retire, and you're set to go.
Awesome. Next one's asking, how much money on average is someone spending for coverage per month?
Well, there really isn't an average. I mean, there's the average in the plans, but everybody's need is so unique. So another thing too, that I want to point out is, even between a husband and wife, a lot of the times we'll see them in two quite different plans, just because their health needs are different. So as when you enter Medicare, you can't get like a husband and wife plan. They have to be separate plans, and Medicare does that on purpose because of everybody's unique needs, whether it be where they want to go to the doctor, or situations like that. So when we're talking about those type of things, you just want to make sure that you have you know your doctor information and stuff like that. It's important to have that.
Thank you. Next one is asking, is there any rule of thumb to help figure out what is best, lower monthly premium or lower deductible?
It depends on the person. So again, I mean, I kind of gave the premium ranges there, and again, it's all over the board. Like Medicare Advantage can be, 0 to a couple $100. Medicare Advantage plan specifically, and when you look at Medigap, that can be $54 for a high deductible plan. We don't have a lot of people in those plans. Most of them go into what's called the basic Medicare plan, which is around $300. And most of the premiums are fairly close for the Medigap plans. And those plans are all they're going to be similar in terms of benefits. And again, those don't change, but most of those premiums again are going to be fairly similar. So we're looking at, the Medigap, you could figure out paying around 300 or so, or it could be more too, because you have to add in that Part D plan. So again, it's important to know medications and doctor. That will narrow down the plans and what makes sense in terms of the premium range that would make sense for a member. Typically wider networks, if you want, wider network, which majority of our plans have, but not all of them. If it's a wider network plan, it's probably premium's going to be a little bit more, than some of the narrower premium, or excuse me, the narrower network plans, which might only have one or two different HMO types to be in, maybe one specific provider, things like that.
All right, next question in the chat here. It says, I'm working past 65. I signed up for Part A. I need a form from my employer to submit when I retire for Part B. The
Correct.
question is, the Social Security site says something about having 8 months to submit that form for Part B. Is that right? 8 months after retiring?
Yeah, you do. Generally, obviously most people get it done the same month they're going to retire. But they do give you more time to get that done. But generally you want to get your Part B set up and stuff like that, once you retire. There's a longer time period, but yeah, essentially, if you want to go without insurance for a little while, you technically can. That's what that means, once your employer insurance ends. But yeah, essentially, you just look at it as you want to start your Medicare, the month that you're going to be retired, so that you don't, have a gap in your insurance.
And then a follow-up question to that, they said, just like at work, the Medicare recipient has to re-enroll every year, right? So you can adjust your plan for changing health needs or do nothing if nothing has changed.
Correct. You can adjust during the annual enrollment every year. You have, that time period to adjust your plan based on the different health needs. So, if your health needs drastically change, every year you have that option during the enrollment period to change your plan. to something that may make sense. And with Medigap, obviously that those health benefits don't really change, but the drug side on the Part D would. So a lot of times when you're with the Medicare supplement, a Medigap plan, uh, what does change is how those prescriptions might be covered on the separate Part D plan. So during an enrollment, you'd still want to take a look at that, make sure medications are going to be covered, those type of things, because those are something that you want to have looked at before 2026, especially this year, because there is going to be a lot of plans that are going to change. And the drug side of things is something that we're expecting a lot of changes on those too, and what's covered, what's not covered. Maybe the different it might be more expensive than it was in 2025, depending on what their tier they're going to put it in. Essentially, they put medications into tiers. The lowest tiers, 1 and 2, are generics. Once you look at higher tiers, 3, 4, 5, those are more expensive medications. And as they change tiers and go up, typically they're more expensive medications, and the amount out of pocket you need to pay is higher. So if they're going to be switching that, you definitely want to be aware of that heading into 2026, so that you will make sure your medication's covered and that it's affordable on your prescription part of your drug plan. And if it's not, then there's obviously going to be some options usually out there on the plan that could. And that's part of, again, what we do, because those do change from year to year quite frequently on how they change, how they cover medications, whether it's Medicare Advantage or separate Part D.
All right, next question here. Do IRMA penalties pertain to both if filing jointly, looking at a Roth conversion?
Yeah, it does. So if it's a joint tax return, it's going to affect both people. And what they're going to look at is the modified adjusted gross income. So whatever your accountant or yourself, if you've done your taxes, whatever that line has is what they're going to use. They'll pull that record from the IRS and they'll take a look at it. And they always go 2 years back, by the way. So if it's 2026, they're going to look at 2024 tax filing. But that's what they're going to go by, is that if you file a joint, they're going to look at that modified adjusted gross income on a joint basis. And if it's not joint, it's less. So let's say if you're above 212 is the requirement for joint. If you have an individual tax return, then it'd be 106. Would be anything above that you would pay more on an individual basis if you file individual tax returns.
Another person asking, do current HSA contributions play into this?
Current HSA does if you enter Medicare. So once you pick up Medicare, then you can no longer pay into an HSA without penalties, essentially. So if you're going to enter Medicare and make that decision to enter Medicare, then you need to stop making payments to your HSA. You can use your HSA on Medicare, different costs, like anything in terms of your co-pays and stuff like that on Medicare Advantage, or your deductible on the Medigap, the 257 we talked about. You can use it for that. You can't use it though, just so you know, on premiums for a Medigap supplement. The reason is that Medigap supplement, that is a state-based plan. So you can't use an HSA, which is federal, on a state plan. However, you can use it on the Medicare Advantage side of things. So Medicare Advantage, you can make premium payments from an HSA along with any of the co-pays you have for any services you have done. You can use that HSA money. But again, you can't contribute once you enter Medicare without a penalty. So you want to make sure that you stop contributing in that scenario.
Awesome. And then last question I see here. At what point must I discontinue contributions to the healthcare expense account as relates to enrolling in Medicare?
Yeah, so when you enter Medicare, so essentially if you don't pick up Part A or Part B and you stay on your employer plan, you can still contribute to the HSA. But once you decide to sign up for Part A or Part B, either one, then you have to stop your contributions into your HSA at that point.
And then one other person asked, are you a broker or an agent? And what is the difference to them?
Oh, the terms are used interchangeably. So we're both a broker and an agent. So an agent just means, that we're allowed to sell Medicare plans. And a broker just means that we work with a majority of, the insurance plans there is. In other words, you could be an agent selling one plan and then you're not a broker because you're only working for one specific insurance company. We don't represent the insurance companies, like we don't work directly for them. We have our own business and we contract with them, and that's why we're called a broker, is we're allowed to, offer all the different options out there in the market, as a broker. And, as an agent, we can, we can have those relationships where we have different options out there. But they can use interchangeably, but again, the big difference is that, as a broker, we just have more options than an agent might be that works directly for like an insurance company or something like that. Because sometimes they do have, agents internal to like say Blue Cross. Say they have an agent that works directly for Blue Cross. They're technically an agent, but they're not a broker because they can't represent any other company. So hopefully that kind of explains it a little bit better how that works.
Yeah, perfect. A couple more in the Q&A here. Someone asking the difference between an HSA and HCSP.
Yeah, HCSPs, to be honest with you, I haven't worked with those too often. I haven't seen those. I'd have to see what they're classified as in terms of under the government on how they classify it. If they classify it similar to an HSA, then it would follow the same rules. If it's not classified under that same, there's an IRS code. We'd have to look at IRS code to see how that, how that is going to be figured in. But I haven't worked with it before, so I can't speculate on that. I'd have to take a look at the classification under the IRS code for that.
And I'm going to jump in just for that one a little bit. The one substantive difference, as I'm aware, between an HSA and HCSP as it relates to Medicare is you can still contribute to an HCSP even when you're on Medicare, whereas you cannot, as Mark had laid out, on an HSA. So that is maybe the key difference when it comes to thinking about Medicare purposes.
Yeah, so if that's the case, then it's under a different, then it doesn't fall under that same classification as the HSA if that's the case.
All right, and then one more. If a spouse is not retiring and has an HSA for the family, how does that work with one person on Medicare?
Well, that's more of a complicated issue, but essentially, if the person that has the HSA, if she's at the employer and she or he is not at Medicare age, they can still put that money in the HSA for themselves, essentially. Um, the question is, they probably have to change. I'd have to look at the rules, but you might have to change um how it's laid out when that contribution goes in, that it's just, specifically for that person that's continuing to work, that's not in Medicare yet. But you still can do it because that person that, has the employer plan, if they're not on Medicare, they can still contribute. There's just probably a way it has to be set up. And we don't work on the HSA side of things, so I can't say how it would need to be done, but it can be done. Where you just have to make sure that, it's following the rules. Sometimes accountants know that too, on how to do that. As far as, they're contributing for one person, but it's not going to affect the person that's on Medicare, as a spouse. But it can be done. We've seen it, but we don't do that here because we don't work with HSAs, in terms of, selling them or anything like that. We usually refer that to like the person's accountant to make sure that they follow all the rules on how to do that and still not, face a penalty and stuff like that.
Awesome. Yeah. And that is actually a perfect segue because those types of questions, how to deal with your HSA, how to differentiate that from an HCSP, those kind of tricky questions are things that our team at Stein Financial Group can help with as well. So we're going to cut off the questions there. I appreciate everybody being so active, and I hope we got to a lot of them, but we're a little past the top of the hour, and we want to be respectful of everybody's time. If you had another question, either A, feel free to email Mark as he laid out, and his contact info is on the screen, or if you didn't get it, we can always forward it to you from Stein as well, or reach out to us at Stein Financial Group. And again, this is something that is general. Everyone has their own Medicare journey and everyone goes through Medicare, but it can be very specific to you. So with that, I really want to thank you, Mark, for all of this great information and for answering all these questions. And we had so much participation. Thank you, Mark. And unless there's anything else you have to say, we'll cut it off here and thank everybody for being here.
All right. Thanks, Anthony. And again, I'm just here and available to provide any help. This year is going to be a crazy year. I just want to let you know that we're here to help. So
Absolutely. Yes. And please everyone feel free to reach out to MediChoice. You don't need to get, a referral from Stein Financial Group or anything like that. But again, we would love to talk to all of you about this as well. So meetings with both parties here are probably a good value. All right. Well, we will end it there. Thank you, everybody. Thank you again, Mark. Great job, and we really appreciate it.
thank you.